morning, everyone. I am Krista Gardner. I'm a partner in our York office. I split my time about 50-50 between government and nonprofit entities. And although I spend a lot of time doing compliance work, I also kind of spearhead our firm's initiative related to outsourced CFO services. So that's a good amount of my time is spent working with government and nonprofit entities in an outsourced CFO role. And before I kick off, I'll throw it over to Kevin to introduce himself.
Thank you, Krista. Good morning, everyone. Again, I've been with the firm since 2004. I'm coming up here in a couple of days. It'll be 20 years. And for those of you trying to do the math, I started when I was 12. So you can see, you can do the math there and see how old I am. Unlike Krista, I primarily work on local governments, mostly audits of those local governments throughout the year, and include single audits as part of the experience that I work on, and also do a lot of in-house training as well. So that's just a little bit of background about me. So with that, I'll turn it back over to Krista to go into steps to prepare for the audit.
Thanks, Kevin. So our presentation this morning to kick things off is really about preparing for your audit and how to think about the audit process to really benefit your organization year-round. So Christina, if you can head to the first slide, some of the things to be thinking about year-round, not just at audit time, that is really going to help you when it comes to audit time, but also to keep some of these topics forefront throughout the year. And the underlying tone here is really how can you utilize these things to be more efficient, more effective, and to kind of create that environment that's forward thinking for your organization. So, a lot of times we're as the auditor asking for anything that's changed throughout the year. So it's very easy to implement a process where you could keep a list of those changes as you're going throughout the year. What processes have changed, what procedures have changed, any internal control changes, employee changes. Some of the things we've dealt with in just the most recent years are hybrid employees, completely remote employees, how that's affected internal controls, moving things from a more paper process to an electronic process. Did you have any changes in your payroll providers? And then who are the people in regards to those processes or that are in charge of those controls? Anytime there's a change in those individuals, making sure that they're aware of those controls, what the processes are, and how to go about implementing everything. So again, trying to keep an idea and writing that down, keeping a list of those throughout the year. And then we always say, don't hesitate to reach out to your auditor throughout the year. This is kind of twofold. So one thing, there's a lot of things that end up at audit time, maybe getting adjusted through journal entries, or conversations come up where something has to change as far as a presentation, your financial statements, or even how transactions have been posted. Why not take care of those when they come up? So don't hesitate to reach out anytime throughout the year if there's anything complex or unusual, you've never dealt with it before. Hey, how do I record this? Or we have a change in, even with our, the processes we spoke about above, there's a change coming. What do you think as far as our internal controls, any major changes in the programs you offer, significant revenue streams, large expenses, and again, any of those operational changes as far as your day-to-day. If anything comes up and you're just not sure of how you should go about it, or you think, hey, we should probably just give the auditor a heads up before the audit time, definitely reach out and let us know those items. And also, as we prepare for the audit, a lot of times we'll be asking those questions. But again, something to think about during the year. One of the other items that we run into a lot is timeliness. So one of the big things there is reconciliations of bank accounts, but then also other accounts potentially on your balance sheet. So if you have your bank reconciliations being done on a monthly basis and there's a review and approval process, that is fantastic. If they're maybe getting a couple months behind, again, when you have controls, you want to try to use those to the best of your ability. So if an internal control that you have is your bank reconciliation process, which a lot of times is what we have, making sure that they're timely is going to help that be more effective. If you're 9 months down the road finding something that was even just an error, it's going to take 9 months to correct it, which therefore then you could have 9 months of reports that are incorrect or had something recorded incorrectly. Capital asset activity. So if you are a governmental entity that does track and record capital assets, keeping a way to track this activity throughout the year so you don't have to go back through the process or through everything as your process for getting ready for the audit. So if you have a spreadsheet or if you have an account or you have some kind of way to kind of identify as those invoices are coming in and being paid that this is capital asset activity. So it's all ready for you to go when it's requested as part of the audit. Debt issuances, so any of those documents related to issuing any new debt, And then also how the debt is being used. So if it is just a refinance, there's not a lot of backup to that other than the debt documents. But if you are taking out debt that you are drawing down for a capital project, having all of that documentation together and in one spot where you can simply have a tracking of here are the funds that came in and here's what has been used, because obviously that information is not only required to be audited during the audit, but then also will be presented on the financial statements and financial reports. Journal entries. So there's usually a lot of activity for many entities throughout the year in regards to journal entries. So not only do you want to have somewhere where the journal entry is approved, but the support related to the journal entry. So a lot of times we'll pick journal entries for testing. We'll send over, hey, we would like to review the support for these 10 journal entries. And then what's given back to us is just a copy of the journal entry without the actual support related to it. So it's good to keep all of that information together so you can just easily pull that. Also, it's a memory trigger because sometimes we're asking you information a year down the road and we're like, well, why did we do that journal entry? So it's good to keep all of that information together. Year-end accruals. So sometimes there are things that can't be done until the end of the year, but there are things that potentially could be taken care of during the year, or you can at least be getting the information together. But having all of that information at hand, keeping track of it, essentially having a checklist of these are the things that I can do each month. These are the things that have to wait until the end of the year to get ready for the audit process. And then all in all is supporting documentation. So having a good method or way that you track all of your supporting documentation, you keep it on hand, you file it, trying to be as organized as possible. Because again, we're asking you about things that happened up to a year prior or even before. And so it's good to have all of that information in one spot, filed and ready to go. Next slide. So the last one that I'm going to go over here is items to gather for the audit. This is taking a look at your internal control narratives. So a lot of times this is something that we've worked with you as your auditor, or if you have another auditor, they've worked with you as far as what your processes are. This is where you document kind of, okay, this is the person that opens the mail and here's who does the deposits and the bank reconciliations, et cetera. So again, keeping track of any changes that happen during the year and having those in one spot and ready to go. Also making sure that everyone involved in those processes has the opportunity to make any updates, any changes, et cetera. Bank statements, so having all of your bank statements available. A lot of times they're electronically now. In most of our audits are using an electronic method to obtain your documents. So it works out perfectly that you could just upload them. But again, having those filed and ready to go for the year. And then usually we at least need one subsequent month. So if your year end is December, we're also going to be asking for your January bank statements. We talked about those capital assets. So if you do get a new capital asset listing after year end from an appraisal company that you're working with a third party, or if you have a manual spreadsheet, being able to update that information and have that ready to go, again, with all of those capital asset additions throughout the year. Debt activity, as we talked about, having any of those debt documents and even supporting documentation for the payments, because those usually need to be pulled as well. Pension and OPEB reports from your actuary, if this is applicable to your organization. Now, sometimes this is a little bit of a waiting game, depending on the time of the year and who your actuary is and the amount of plans that you have. But having a kind of an understanding of, okay, we have to turn in the information by this time to them. So obviously we can get it turned around as quickly as possible to get that report. A lot of times we'll end up asking, hey, do you have your OPEB report? And then the client realizes that they still need to submit the information to the actuary to be able to prepare that report, and it takes some time. So having that checklist or to-do list of those items that need to be sent over in order to get those reports. And then just having a good idea of when you usually get the report. You can always call and say, hey, when do you expect us to have this ready? But that also gives us an idea of, okay, if it's not going to be ready until 2 months after year end, we can kind of plan for that. If you have any leases or even submitted information, the software-based information technology agreements that act like leases, if you have any of that information that's applicable to your organization, keeping track of those, and also any new leases or technology agreements, making sure you have those on hand because those are items that have to be assessed each audit. And then your compensated absences summary. Again, this is something that usually gets done at year end, which is okay, but making sure you have that on your to-do list when you can get it done in a timely fashion and having the supporting documentation available if requested as part of the audit. And now I'll hand it over to Kevin.
Thank you, Krista. So what we're going to dive into next are just some overall reconciliations to prepare for the audit. So I don't think anything here is really new or unusual or anything that's out of the ordinary of what you're used to preparing for your audit, but just want to walk back through some of the steps and some of the reconciliations that can be prepared to assist with the audit. So first and foremost, when looking at the assets, so this slide is just full of various asset reconciliations, but obviously the first piece is looking at any bank reconciliations for all of your cash accounts at year end. The most important piece of that, obviously, is reconciling that to the general ledger. I know sometimes that sounds pretty obvious, but you just want to make sure that those reconciliations are indeed reconciled to the general ledger. Occasionally, what happens is there may be a journal entry that's made after the reconciliation is prepared, and then the reconciliation doesn't tie the general ledger. So even though you may prepare that first, you always want to circle back and make sure that that reconciliation does indeed tie into the general ledger. If you were to have any investments, you want to make sure that those statements are obtained and again reconciled and recorded as of year end. Obviously, as a governmental entity, you're limited as to what you can have investments in or what you can invest in. But a lot of times we do see CDs or certificates of deposit, and you may not always receive monthly statements for those investments. So because of that, you want to make sure that you're obtaining those those statements from the bank institution that you're working with to make sure that those are reconciled and recorded appropriately as of year end. Moving down into accounts receivable, again, you want to make sure that you do have an accounts receivable listing for all the receivable accounts. The most three common that we have, it just depends if you have governmental funds or if you have proprietary funds, and you want to make sure that those are reconciled to the accounts. But you could have regular accounts receivable, you could have intergovernmental accounts receivable, those are from other governmental entities. So whether that's local entities, you could be state agencies or the federal government directly itself. All of those are just considered to be intergovernmental receivables. And then also, if you do have utility funds or proprietary funds, you would have accounts receivable associated with those. The only thing to look at there, or item to be aware of, is your accounts receivable is looking at any potential amounts that would not be received within 60 days within your governmental funds. Those are considered to be unavailable. So if you do have any of those, just kind of highlight those separately or record that unavailable revenue for that and make sure that your auditors are aware of that as well. Similarly, if you have governmental funds that have taxes, you just want to make sure that you're having that reconciliation there for your taxes receivable, including those amounts that are due or received after 60 days. So you are seeing your first polling question pop up, just so everybody's aware of that. You want to make sure that you have that and you're able to answer that question. The next item that I'll highlight briefly is just your interfund activity summary. You do want to make sure that your due tos and your due froms balance. I know that sounds overly simplistic, but occasionally there could be a transaction that's only recorded in one fund and it is missed being recorded in another fund. So occasionally that can cause a little bit of a reconciliation issue. The other item that we do see that happens near year end, one fund may be reimbursing another fund and that check may be written on the last day of the fiscal year, but then not deposited into the other fund until the next fiscal year. So again, that just causes a reconciliation issue. I want to make sure that those due to, due froms do indeed balance to zero as of the end of the year. The last two items are just to take an inventory summary. You want to take a physical inventory as close to year end as you can and make sure that those again are adjusted. Make sure that you're calculating any prepaids appropriately as of year end as well. Moving to the liability side of things. So again, similar reconciliations to prepare for most of the liability accounts. Again, Krista already touched on the pension, the OPEB, the compensated absences, your debt transactions. But as far as your typical liability accounts, you start with an accounts payable listing. So that's looking at any payables that were either purchases that were made and the goods were received before year end, or the goods and services or the services were performed prior to year end, but the amounts were paid after year end. So where to start at as well as the accounts payable listing is looking at any checks written after year end. That's part of our test that we perform is performing a search for unrecorded liabilities and looking at those checks that were written after year end. Also, we're looking at any open invoices. So any invoices that are received but not yet paid. We just want to make sure that are any of those related to the previous year and should be recorded in accounts payable. The other item that I'll point out briefly is just to make your auditors aware of any delay in paying any invoices. If for any reason you're holding an invoice for payment, you want to make sure that your auditors are aware of that and explaining the rationale for why it hasn't been paid. and ultimately determine whether the payable should be recorded related to that. The other item is related to payables is retainage payable. So if you have any large construction projects, want to make sure that the appropriate retainage is recorded as a liability if you're reporting under the accrual basis of accounting or modified accrual basis of accounting. Basically what that is, if you have a large construction project, they're withholding a portion of that payment. You don't have to make payment until the actual project is fully completed, but that work has been completed. That work has been incurred. So because of that, you do record that liability associated with that. So you just want to make sure that you have the latest AIA document that shows the work performed through the year end and that the appropriate payable is recorded for that. Also, if you were to happen to have any escrow deposits, you just want to make sure, again, that those are reconciled to the appropriate cash accounts. Again, it could be an escrow liability account, making sure that that's all set with the appropriate cash if you were to have any escrows for your governmental entity. The last three items are all related to the payroll. So any accrued payroll and benefits, just want to make sure that that calculation is being recorded or calculated appropriately and then recorded in the general ledger. And similarly, any payroll withholdings. So we'll typically look at the amounts paid after year end for any payroll withholdings that were held through the end of the year.
Hey, Kevin, we do have a question. Sorry to interrupt.
Sure.
Do you have an actual checklist available so that we can go through the list and make sure all items are in process before the audit process starts?
So I wouldn't say that we necessarily have a checklist per se. What we typically do for our audits is we, for the vast majority of our clients, prepare our listing of items requested related to the audit, and we use a secure website called SureLink in which those requests are made. So those are tailored for each individual job, for each individual client, for the actual request that we need. Some of the items that we have are, again, related to accrual related clients, but if we have a cash basis client, some of these items may not be applicable. So we don't really have a standard checklist, but we try to tailor that for each of our individual clients. Hopefully that helps to answer the question, but if there is anything else or need further clarification, feel free to type that in the chat and happy to elaborate a little further. On the next, we'll now move to the fund balance reconciliations. So this reconciliation here, for the most part, talks about governmental funds, looking at the fund balances for governmental funds. And obviously, step number one is to make sure that the beginning fund balance this year matches the ending fund balance and the previous year's financial statements. So that's always step number one. Recommend for both our clients to perform that procedure, but we're also doing that as well. And that's basically the first step that we do when we import the trial balance each year to make sure that we're rolling forward with the appropriate beginning balances. Next, we just look at the reconciliation of the classifications of fund balance. So you can see the appropriate categories here as determined by GASB. First is a non-spendable fund balance, and those are what exactly it sounds like, but those are items that cannot be spent, such as prepaid expenses and inventories, and those are a direct offset to those asset accounts. The next three categories move down into various classifications then. We have restricted fund balance, and those are restricted by an actual outside third party. So not an internal restriction, but an external restriction related to those funds. Next is the committed fund balance, typically where board action has been taken to commit fund balance. And just a quick reminder there, when it comes to committed fund balance, the action to commit fund balance has to be taken prior to year end, but the amount can be determined at a later date. But the actual action, board action, has to be taken prior to year end in order to commit those funds as of year end. And then the next category is your assigned fund balance. Typically, we see that authority given by the board to management, and that can, again, set it aside for specific purposes to assign those fund balances for various future items. It also includes a budget deficit for the next fiscal year. So we typically obtain the budget for the next year. And if that is a budget deficit, that does get disclosed and classified as assigned fund balance as of the end of the current year, under the assumption that that fund balance will be utilized if the budget were to fall exactly into place for actual results. And then if it doesn't fall, if your fund balance doesn't fall into one of the above categories, it falls down in the unassigned fund balance, and that is, again, the residual fund balance. So what we recommend is just to review your fund balance policy. GASB 54 established these fund balance classifications several years ago, about 15 years ago now, but we just recommend to revisit your fund balance policy to ensure that you're in compliance with the policy that you have in place. So just a couple items to have available for your auditors. Again, these are typically for the accrual-related clients, but we first obtain a listing of subsequent receipts for 90 days after year-end, and similarly subsequent payment listing for 90 days after year-end. So that assists us with auditing both the accounts receivable and the accounts payable balance sheet accounts on your general ledger. As mentioned, we do obtain your current year budget, both the original and final, if there were any amendments made. If you're governmental funds, again, obviously the budget versus actual statement is included in your financial statements. But even if you are proprietary funds or utility fund only, we typically may do some variance analysis with the budget compared to the actual results. We do ask for the subsequent year budget as well, again, for the governmental funds, just to include the assigned fund balance there if there is a budget deficit. And then each year, in order to assist with the auditing of the payroll, we obtain both your 941s and then any other payroll reports that may assist with that auditing of those areas. And then lastly, we have the explanations for variance analysis. If you're aware of any significant fluctuations from year to year, we'll ultimately end up asking about those. So the more of those that you can have answered in advance, that just kind of assists with that process there. Just a couple of other items to have available. Again, first, having a summary of any pending or threatened litigation. That if you do issue financial statements, that may have to be disclosed or reported as a liability within the financial statements. So it helps to know that in advance. Similarly, we do typically send letters to the attorneys that are utilized during the year. That way they can assist in responding to that and making sure that there are no pending or threatened litigations to be reported within the financial statements. But we just recommend to review the list of attorneys that were actually utilized during the year. Sometimes we get that listing and the only item that the attorney was used for was to respond to our audit letter. And then we're kind of in a circle there where that gets sent out, gets returned, there's no items. And then we do the same thing next year. So only if those attorneys are being utilized for any pending or threatened litigation does a letter need to be sent. Also updating any agreements or contracts. So whether that's significant vendor contracts, union agreements, or construction contracts, that just assists us in completing our audit. And then we have a couple of other items here. If you do have a fiduciary fund in which the pension is reported in your financial statements, we'll obviously just need the annual statements for that to audit the annual activity. Also, any check numbers for both cash disbursements and payroll to assist with our samples for our control testing, and then a listing of all journal entries that are made during the fiscal year. As Krista alluded to, we do perform journal entry testing on every audit that we perform. So just moving now to grants, obviously a lot of governmental entities are receiving a lot more grants now than what they had in the past. So what can assist with the audit process for that is starting with a summary of all the grant activity for the year and splitting that apart into the source in which it's coming from. So whether it's local grants, state grants, or federal grants, making sure that you have that understanding of where those grants are coming from. Having said that, just because a grant may come from a local, like a county or a state agency, it could still be federally funded. So because of that, you just want to make sure that you have a complete understanding of where the sources are for the grants that are being received. And then we've just summarized here some information that helps to summarize that grant activity, obviously looking at the receipts and the related disbursements for each of those. And again, that typically drives the disbursements or the expenditures drive the ultimate revenue that's recorded within the financial statements. And that leads into the calculation of any receivables or unearned revenue. Similarly, we talked about revenue earlier. Any amounts not received within 60 days, similarly for grants, also gets reported as unavailable revenue. So just to, again, be aware of that on the modified accrual level. If when it comes to grant activity, if they're not received within 60 days, typically that's considered unavailable revenue for the modified accrual basis. Just a little bit more is related to grants, related to allowable uses, making sure you have a timeline to use the funds. Obviously, you want to have a process in place to track all the grant activity and make sure that you're reading the grant contract to make sure that you're in compliance with all the requirements associated with the grant. Obviously, I know we have an exclamation point here, but you'll make sure we're not double dipping related to any of the grants. And that's just making sure that you're not taking an expenditure and applying it to two different grants and getting the same reimbursement on those expenditures. So we don't run into that too often, but obviously just want to be made aware of that and make sure you have a proper tracking mechanism in place to avoid any double dipping, and making sure, again, finally, that you have appropriate understanding and controls in place related to the reporting requirements for each of those grants. Sometimes they may be quarterly reports or quarterly expense reimbursements, but just making sure if there's any other reporting requirements that you have a solid understanding of those as well. So just briefly, I want to touch base on federal grants and single audit reminders. As of today, the threshold for a single audit is when a governmental entity or when an entity expends more than $750,000 in federal funds. That is all federal funds combined. So if you have two different grants and you spend $400,000 on each of them in the current year, you would need a single audit. On the flip side, if you only have $700,000 between two grants, you would not need a single audit for that. So $750,000 is the threshold for that. And it is based on expenditures, not when the actual funds are received. So sometimes we may get a call. Somebody says, hey, we need a single audit. We were awarded this grant. Well, how much did you spend? They said, well, we haven't spent anything yet. And in that current year, a single audit would not be required either. This is the current threshold. That will be bumped up to $1 million in a couple of years. And I think that's going to be covered here in a later session with those details. But as of today, again, that threshold is $750,000 of federal expenditures. So what we recommend is just to prepare a schedule of expenditure of federal awards if you do have federal expenditures that exceed $500,000. Again, the threshold for a single audit is $750,000, but as you near that threshold or get near that threshold, we just want to make sure that that is appropriate and that that is the correct amount. So as you get closer to that threshold, it's more important to prepare that CFAR, that schedule of expenditure of federal awards. And then finally, if you haven't gone through a single audit, that does consist of both compliance testing and internal control testing over compliance over those federal dollars. So the key thing there is, again, making sure that you understand what those compliance requirements are and that you have the appropriate internal controls over those compliance requirements to make sure that the compliance is met. So the more that you can document the internal controls over that, the better. So the last slide that I'm going to touch base on are just a couple of footnote items that are needed. So if your governmental entity does prepare an external set of financial statements, there are just some additional footnote items that can be prepared or obtained to assist with the preparation of the financial statements. So if you were to have any related parties or joint ventures, just having an understanding of what that financial activity is, so whether it's payments to or from your related party or joint venture, the more that you can have that summarized, that'll be disclosed within the financial statements. Similarly, I know we talked about construction and progress or construction projects. So any summary of that activity, as well as any signed commitments that you may have related to that, having that for your auditors will assist in the financial statement preparation process. Also, if you have any unspent bond proceeds, I know typically those are kept in a separate capital projects fund, but having that summary of those amounts will assist us as well. And then summary of any significant subsequent events. So if there are any debt issuances, construction commitments signed subsequent to year end, any significant subsequent events, again, typically are disclosed within your financial statements as well. And then we also have two other disclosures just highlighted if you were to have them, a summary of any tax abatements, or if you've issued any conduit debt on behalf of another entity, that's a required disclosure as well. So with that being said, I'm going to turn it back over to Krista to wrap us up.
All right. So first off, I'm going to just discuss, what types of things you should be talking about with your auditor. Christina, if you can go to the next slide, please. So the audit process. So first thing we always like to talk about is timeline, and we like to work backwards. So a lot of times there's going to be at least one presentation of audit results that's going to be happening. Sometimes there's more than one if you have a finance committee or a management committee and also a board that requires a presentation. So kind of starting backwards as far as when are the due dates, when do we have to have presentations, when are draft meetings, et cetera. And then walking backwards as far as, okay, in order to meet those, here's where we need things to be available and ready. And then kind of how that works into when you think things can be completed. As Kevin talked about, a lot of times we give a requested items list in the form of SureLink online as this kind of to-do list. And I recommend that as kind of the way to start with making that checklist. We also have dates in there that we can utilize. I kind of talk about, is this something that can be ready and available for us before year end that potentially we can start on in preliminary fieldwork? And then is it items that essentially we need in order to get fieldwork started? So that can help you in creating that checklist of dates and when things can be done. Expectations, for those of you that have full sets of financial statements, are there any pieces that you as the client are preparing and providing, or what are you relying on us as the auditor or your auditor to prepare? Who needs access from your team and our team to different documents, how they're going to be shared? Is your audit going to be completely remote? Is it going to be on site or hybrid, which a lot of them are now? And then how that information is getting shared. So we talked about that SureLink process. We like that because it keeps everything in one spot and it's secure and everyone has access to it, as opposed to sending things via email, because then they can get lost in one person's inbox or even in the spam folder. Other ways to utilize your audit, best practices. How can we improve? Internal controls, processes, procedures. Are there items that essentially the auditor has identified that you could potentially be improving upon? Or just asking the question, asking us, the auditor, what are you seeing at other municipalities or school districts or governmental entities like us? What are they doing that we could be doing in order to increase our internal controls, the effectiveness and efficiency of them? Previous audit results, so going over any findings from the past or internal control deficiencies, have those been corrected? Are they still issues? How can they be corrected? Proposed journal entries. So we did talk about a lot of times there are adjustments that get made at year end or even as part of the audit process. We have some clients where there's barely any journal entries that come out during the audit process, and then we have some where there's quite a few journal entries that come up. The one thing we always like to talk about is the more journal entries that happen at year end, that means more adjustments to the information that was provided during the year to those making decisions. So trying to decrease the number of those entries, I think, is the most effective for your organization to be operating as best as possible. So taking a look and saying, hey, any of these journal entries, could they be done during the year? How do we do them? Walk us through that process. Hot topic items. This is something I'm always asking, especially before the presentation. What are the areas of interest to your board members right now? Is it fund balance policy? Is it cash? Is it investing, et cetera? For a while, we're dealing with the ARPA funds, how they're being used. They're starting to fizzle out now. But essentially, we're here as your auditor or that consultant to essentially help you through some of those conversations. So if you need someone to bounce ideas off of, or just ask, hey, can you, come in and talk with our board? They have some questions on or would like to look at, these different areas. Same thing with the community. Obviously, we've got public meetings, so sometimes you'll have some community members that are coming in and asking specific questions or discussing different items related to your financials. And then industry trends. So as I said, we're kind of getting through those ARPA funds and the additional COVID funding. I'm sure there will be a round of who knows what type of funding that comes out in the future, as every couple of years we deal with different types of funding that's coming out. And other trends as far as if you've got mergers happening between different types of services provided. So these are the types of items that we're always saying, what's going on? How can we help you? But then also helps us understand the financials that are happening that we're auditing. So then the next piece, and just a heads up, another question just came out. So we make sure you want to answer that. So the last two slides actually are a little bit of a teaser to a presentation that's going to happen a little bit later this morning. But essentially other ways to be helping your organization. So the financials are a big part of how you make decisions. So are there opportunities where training or education can be provided to board members, management, and even staff members, department members, et cetera? Again, a lot of decisions are being made. Are those that need to be understanding your financial information, do they understand? Has the question been asked? What more could they need? What questions do they have? And then on my last slide, Christina, other ways to be using your audit information or using those conversations to your advantage as far as looking at cash flow. Do you have funds that you could be investing to be making more money on? Or are you in a position where you've got to make sure you've got enough cash at certain times of the year based on, different activity or how your, tax revenues come in? What trends are out there that you need to essentially be looking out for? Planning for the future. Do you have any large capital projects or any deferred maintenance that will need to be taken care of? And then operating and programming analysis, looking at each department, any specific programs that you might have, or even just overall operations to essentially say, okay, are we set up for success in the next 1, 3, 5, and even 10 years? What are the goals of your organization and how do you get there? And that all kind of is the financial information is the backbone for those decisions and kind of getting to that point. So again, a quick snapshot of what's to come. That's all we have for our first presentation this morning, but any questions for myself or Kevin?